And we are live. Hey, everybody. Thank you for being here. Todd Schroth here with Agents Who Win with my family member cousin, Kimberly Stevens with Kimsurance. I want to just thank you guys. If you want to follow us, Agents Who Win on Facebook, YouTube, and Instagram. We'd love for you guys to connect with us in all places. We've got messages on all of them. And then, we'll reach back and see what we can do with everyone. So, Kim, I want to thank you for being here. Last week, or actually 2 weeks ago, we had Eric Tamayo on talking about 401ks and independent contractors. And that was a great, pretty much episode that talked about like the investment planning and other stuff. And I just thought it would be a great segue with the insurance, because you and I have been having a lot of conversations recently on that. And, with being an independent contractor, what we can and cannot do versus getting the employee benefits. As a small business of three, paid employees, I didn't realize that I could offer 401ks to my employees. Excuse me, I lost for words today. So it was a nice benefit when we found out we could do that, and they loved having that. And it's nice to be able to contribute versus saying, here, let me give you this much more money as a raise. Now I can have them invest and invest with them, and they're now saving for retirement versus, hey, you're on your own. The other thing for us with small businesses, it's hard to offer insurance. Even on our own, it gets a little bit more expensive. So I wanted to bring you on here today to kind of talk about the insurance. And you got a lot of products that you're selling. And right now, obviously, open enrollment's coming up in, I think, 6 weeks. So it's a big time for everyone to if they're looking at new insurance options. I know we are, because 12 years of Cigna has said bye-bye. So we're having those conversations as well. So kind of tell us about yourself, and then we can dive into what you have going on.
So as Todd said, I'm Kimberly Stevens. I am owner of a company called Kimsurance. And what I do is I build employee benefits. I manage large groups, I manage small groups, and I manage individuals. And when Todd told me that you have been talking about 401ks and benefits for employees, this actually segues in quite nicely. You'll see as we begin to have this conversation, there is a little tiny slide about 401ks and retirement. But most importantly, we work for ourselves. Ourselves are corporations. And the number one thing people want out of their employer, which would be ourselves, are benefits. And we forget that when we work for ourselves. We spend hundreds of dollars every month on things like Starbucks and lunches, but we don't think about building our benefit package.
You had talked about that earlier, and we'll probably see that on the slide here in a little bit. Disability or just life insurance in general. I mean, we spend $50, $100, $150 a month on it, and I don't want to buy it because I think it's too expensive. Yet then, what do? We go out to lunch, 4 or 5 times a week. That's $80 to $100 a week. If you figure that times 4, it's $400 a month. It's a car payment. It's it's a really good life insurance policy, or other opportunities that are out there. So it's just a matter of playing with the money, and bring lunch 2 days a week, and you can actually afford the life insurance.
Absolutely, and we're worth it. And there are a lot of long-term reasons why these benefits are necessary and can help you in not only now, in your future. And in case that pox upon you, visits your door. Do
you want me to bring the PDF in?
Sure.
PowerPoint? Okay.
Absolutely.
So, folks, we had a little technical difficulties. We're running 3 computers here. And let me just figure out how to get this one back in there. Nope, just lost her. There we are. All right. So she's asking me to hit the slides because it's on my laptop next to my my screen here. All right, so we got building your benefits package. I'm just going to go right into slide 2, and just tell me when to hit next, and I will go through them.
That's perfect. So the top 4 benefits that people want who work in corporate America are listed here. It's flexible hours, paid family leave, professional development, and employee recognition and appreciation. Obviously, we work for ourselves, so our hours are as flexible as we decide. Paid family leave, I don't know about you, but I don't get paid when I leave. But professional development, you all are on this call. This is part of professional development. We also have life coaches, and we do seminars and various other things to enhance our professional development. And then employee recognition and appreciation. I see that when I get my paycheck. How about you?
my paycheck is I put in I put into it what I can. I love with the employee recognition stuff, because I was saying earlier, for Rachel and Katie, it was nice last year to offer them 401k, and to see them actually have something going towards it, and they max it out, so we max it out. So it's a nice way to kind of give back to the employees.
So if you look at the next slide, it's going to show you a huge list of different benefits. I looked on Glassdoor.com, which is a huge employer recruiting site. And these were some of the benefits that I saw on Glassdoor.com that corporations were trying to bring their employees in by offering. And so you'll see that health insurance is top of the list, vacation, paid time off, performance bonuses, 401k, as you've been talking about, scheduling. But some of the things that really stood out to me on this list, I'm not going to read the whole list, are the ones that we can offer to ourselves and to our employees as small employers or 1099s. So if you look at the next slide,
okay,
these are all the benefits that are possible. There's probably more, but these were the ones that really stood out to me, that if we're not offering as a 1099, it's probably because we didn't know it was possible. So obviously we start with healthcare insurance, and we're going to look into that a lot more specifically. Retirement, I know you've been looking at that in the last couple of weeks. The flexible schedule when we work for ourselves, and I put that on there twice because I'm very flexible.
When you leave the office, you're off work.
Employee development programs, again, we talked about that. Tuition reimbursements. We actually, if we structure our corporations or LLCs in the right way, and you'll need to talk to a CPA, but we can actually do tuition reimbursement. Gym memberships, we can do that as well. Disability, life insurance, long-term care insurance, and mileage and car reimbursement. Those are all things that can be built into our corporate structure.
So talk about tax planning, and I don't know if you can answer this or give an idea on it. This is not legal or tax advice, folks. So if you guys have questions, please talk to your accountant, your attorney, or your certified professional in that department. If we bought a gym membership, obviously I would love to put it through my corporation and write the $100 a month off. Do you have to buy it for every employee, or is it for just the president or whatever title you want to call yourself within your corporation if you have other employees? And then I'm curious how the tuition reimbursement works. What's that about?
So gym membership and tuition reimbursement, those are all things, if you code them correctly in your taxes, yes, you can put those on the pre-tax dollars side. A gym membership, I would, and again, you'll have to ask your CPA for specific details on this, but yes, if you're going to offer it to one employee, meaning yourself, you do need to offer it to everyone. And there's no law that says gym membership, blah, 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 blah. The issue is if you offer to some and not others, you are leaving yourself open for discrimination lawsuits. Right.
I know with the 401ks, they can opt in or opt out of it. So probably the same thing there. If they don't want to take the membership we're providing, then they don't get to take advantage of it. So and that's something, again, talk to your accountant, talk to your attorney. I'm just trying to think of how we can pay less to the government and put it back towards our own benefits.
Exactly. And you'll always want to, if you're offering an employee benefit, as you do with health insurance, you offer it to everyone. They do not have to take it, but you will get a signed document from each employee that says, I know on September 18th, I was offered health insurance and I declined it.
Okay. Smart. That way you've got record of date that it was offered and that they've declined that opportunity.
Absolutely.
Cool.
Tuition reimbursement, that falls under personal development. It does usually, and again, you'll talk to your CPA about this, but usually it has to fall under the guidelines of, like I, as a health insurance and insurance advisor, there are a lot of legal ramifications. So if I wanted to pursue some legal courses, that would fall in line of my line of work. So I can't just go out and decide I'm going to become a doctor and get that reimbursed.
Okay. So it's the tuition reimbursements are specifically for the employees or the employer I think it's if you can offer a new person coming in, hey, you're with us this long, we can offer this back to you, and it's a tax advantage to yourself because you are giving back to the employee, for a way to work that out. That's awesome. And life insurance, long-term care, obviously we've talked about that prior. Mileage reimbursement, we do that with our employees if they're doing long trips for us. It's only fair to, if they're using their vehicle, to go ahead and do that stuff. All right, should we go next slide?
Yep.
All right, cool.
So the benefits of offering packages like this, and we've talked about this, so we'll be really brief here, is one, you get tax benefits. It also allows protection for ourselves and our families, both providing insurance for health. Obviously, that's providing protection for our employees. Long-term income protection, that's a big one, and we're going to revisit that in a couple of minutes. Peace of mind, knowing that one, you're getting the best bang for your buck for all the dollars that you're earning. That's one. But two, also knowing that your needs are met. That's a huge peace of mind. And then the last point is you're worth it. We work really hard as independent contractors. We work hard. And just because we're independent doesn't mean we don't deserve benefits. No,
and that's the thing is, we can only provide so much, and we want to make sure we are providing the right stuff. So I'm not walking into a job and getting, the benefits package. I'm walking to my office every day. If I don't show up, the lights don't get turned on. And so we've got to do that to be able to provide back to everybody. So we are worth it, and we need to make sure we do take care of ourselves and go through that process. Let's hit the next slide.
So what are some of the reasons we don't provide benefits for ourselves? We wrongly think they're too expensive. And, it goes back to what we were talking about at the very beginning. How much did you spend this week on Starbucks and lunch?
Yep.
Another thing is we just don't know how to set benefits up. That's where somebody like me comes in, or your CPA or your financial advisor, or we just get too busy. I know that when I get real busy selling, I forget about my admin. Anybody else?
And that's the thing is you've got to make time to set aside to make sure you can budget for it. And like you said earlier, it's like, I spent $80 on lunch this week because we've either gone out to lunch with somebody or coffees or whatever. And that if I just do that one thing, then it's going to make a difference, giving money, having that, not going out to lunch so much, not getting the coffees or other things, taking the small little things in life that don't really make a difference to something that will make a difference is what I guess what I'm trying to say. Sorry, lost for words. All right, so we got, go ahead.
So this is specifically just talking about health insurance. And there's a lot of ways we can get our health insurance. I happen to be a company of one. So I am an individual. There is no opportunity for me to purchase group insurance. And so there are places I can look. I can look in the marketplace. I can also look outside of the marketplace in the individual market. Different rules and guidelines govern each of those types of plans. And if you have questions about that, definitely give me a shout or call someone who is knowledgeable about that. Insurance does not have to cost $1,200 a month in order for it to be effective. It just depends on your needs and priorities. I do know a lot of real estate agents who do not have health insurance. And that's why I put this second bullet in here, is that without health insurance, the average cost of a major heart attack and cardiac rehab is $500,000.
Jeez.
$1 million. So would you rather pay a monthly premium and be protected against that? Or do you want to pay off that debt for the rest of your life, basically, or file bankruptcy and lose everything?
The smallest thing, like not even going to that 500,000. Emily had cut her finger, I don't know, a week or two ago and got freaked out. So we took her to the ER. We have great coverage. We thought we did. And the ER visit was $700. And I can just imagine without insurance walking in what that would have been. I don't want to spend thousands for a small cut or something that would have required a few stitches. So it's somebody's commenting. So it's like just even a small number like that, if walking in at $700 is your car payment, is your, groceries for the month or something else. So it's good to have, and if it was thousands, obviously we wouldn't have gotten cared for, because I'm not going to spend thousands of dollars like that. So it does give you peace of mind knowing I can go and get that done. Now, obviously, make sure your deductibles and everything else are in the right order. You've got a small story of why you kind of got into this business. So you want to talk about that for a minute?
Yes, I do. And this is really my passion. And so in 2010, I'm going to go back to 2009. I was 4 years old. I was top 10 in the world in 8 swimming events in master swimming. And in 2010, March 5th, I was diagnosed with breast cancer. And it completely changed my life. Point is, I was the picture of health. I was swimming 12 to 15 miles a week and in perfect health. And I got breast cancer at age 44. I happened to work for a huge corporation and I had great health insurance. However, I never purchased disability. So what I got was disability insurance that my company had to provide for me by law. And it was 60% of my base salary, which my base salary was a third of my income. And because my employer purchased it, it was taxed. So I can't even tell you what the percentage was, but I can tell you that in the 9 months that I was being treated and not working, I racked up over $55,000 in debt because I had to keep my household and my children running. That debt caught up with me hugely. I was in the pharmaceutical sales industry, and in 2012, when Obamacare passed, jobs became scarce, and I was laid off 4 times in less than 2 years, and I became unhireable in my industry. So I was in $55,000 of debt and unhireable. And that became the perfect storm for, I lost my car, I lost my possessions, and I eventually had my home foreclosed on. And a simple thing like a critical illness policy, it's not even disability. A critical illness policy might cost $100 a month. It could have given me a payout of anything I wanted, but say I had chosen $50,000, that would have been about $100 a month for me. It would have saved everything for me. There are disability policies that actually insure your income. Those can be more expensive, but there are also very inexpensive, just regular term life policies that pay out 2% of the benefit every month if you need long-term care or you're disabled, or if you're diagnosed with a critical illness, they'll actually pay out up to $100,000 depending on your face amount for you when you're diagnosed. So, and they sell for the same cost as a regular 30-year term life policy. So those are really simple ways that anybody could have or could avoid what happened to me. And it scares me now because I am a 1099, I work for myself. I do not have the ability to buy a critical illness policy because I've already had one. So, I need to start saving and protecting myself in other ways.
So they don't let you, if you've had a situation prior, you cannot buy another one because that may happen again.
Correct. I cannot buy another cancer policy. I can buy something for a heart attack or stroke or organ failure, but never cancer again.
Okay. And that's scary. It's the small things. You've been talking to me about this for a while. If anything does happen, it does back you up. In our conversation a couple of days ago, as we're talking about this call, was, some new things that have popped out, what you just mentioned. They'll pay out X amount. Obviously, the higher the policy, the higher the payment, or the higher the income, that you're trying to protect. So it's obviously the higher the income, the more coffee you're drinking. Put the coffee away and protect the family. So it does. Now, are you buying that? Like for us as agents, we have quite a few different ways that we get paid. One is through an LLC or an S Corp or directly. Do you have to have a corporation set up for that or anything? Yeah. Or can you're straight out?
You can buy this as an individual.
Okay.
First and foremost. So anybody can purchase this. And life insurance is never less expensive tomorrow.
Right.
That's, one of those things is the older we get and the closer we get to that next birthday, the more expensive our life insurance becomes. So always a good idea to lock your rate in when you're young and healthy.
Right.
But these policies, anybody can buy them. They can be structured to be purchased with pre-tax dollars, depending on how, again, your corporation is structured and what your goals are.
Okay. Something, again, to talk to the accountant on. But, yeah, if there's any way you can push it through the corporation, obviously it's a better tax planning strategy.
Definitely.
Let's go next slide. So this is where we talked about the IRAs and traditional IRAs and SEP IRAs. For more details that are like dive hard into that, check us 2 episodes ago with Eric. But go ahead and chat on this for a minute.
Yeah, so it really surprised me. I was always under the impression that I could only contribute a certain dollar amount. Now, obviously, I'm not able to contribute $55,000 per year into a special enrollment IRA, but it's possible. And, those numbers, they change according to our net income and so on. But those are the kinds of things that are possible. I am a 55-year-old woman right now, and I've just finally recovered from my last 10 years of cancer and rebuilding my life. And I'm finally meeting my expenses. But I'm basically starting over with my retirement. So
Right.
That's really going to be helpful. If I can actually find some clients, I will be able to contribute a lot more. And I need to.
Well, that's and it's nice as you get older, you are allowed to contribute more. But it's obviously when I was 18, my stepdad had given me $500 to put into an IRA, and I wish I would have started putting more in at that time. Because obviously the guy at Smith Barney at the time was like, I love seeing people at your age because you're basically here and you're going to take your income up to here. If you start here, you're only going to see that much return. So it's just a little bit all the way up. Obviously we weren't smart when we were 18 years old doing that. I was doing other stuff. But I wish I would have done that. So I would, like with our kids, like start putting the money in early and do that. I mean, we just took their money out of their savings accounts. It was making 0.0005% and put it in Disney. And I get to tell them every day, hey guys, you made $6 today on your stocks. And
Nice.
it's better, that's 6% return on their money or whatever it is. So they enjoy watching that now. So it gets a little more excited than seeing their statements that come in every quarter or something that shows they made 22 cents on their $1,000 they had in there.
That's awesome. Love that.
Yeah. So they do. So it was fun. And we let them, pick what they were going to do. So you kind of talked on the IRAs a little bit more here.
So this is looking more at the post-tax dollar side with a Roth IRA. The reason why I'm really enjoying this right now is my CPA gave me some advice that when I go to draw on my income for a Roth, because I'm paying the taxes now and putting that money into savings, I will not have to pay taxes on it when I draw it out.
Right.
Which is a huge benefit. So I have set up a solo K Roth, which I didn't even know what that was until 12 months ago. And I'm able to contribute, again, it goes based on your income. So I'm not at the 55K level yet. I'm only $250 a month right now, but I'm really proud of myself for actually getting there.
No, that's I would love to learn more about the solo K. I saw that and I thought that was a typo. Never heard about that. Never heard of that before. All right. So we've got, so HSAs, this is something I've heard a lot about. And I actually thought it had gone away once Obamacare had come in. So let's talk on this because this is something that I think my parents have and actually do well with.
So an HSA health savings account, the federal government determines the amount that you're able to contribute each year. It's just a couple dollars above $6,000 right now. So basically what that is it's a special health insurance plan that's designated HSA, health savings. So you have no copays when you go to the doctor. Usually you have about a $6,000 deductible per person. And you actually are going to pay a network reduced rate when you go to the doctor, and you're still going to get all the insurance discounts, but The point is you're able to, if you're disciplined and you put money into a bank account called a health savings account, you can draw off of that money pre-tax and pay for your medical expenses. So it's actually like if you save $1 pre-tax, you're actually getting $1.20 or $1.25, depending on which tax bracket you're in, of benefit when you actually pay your medical expenses.
You can't complain about that. Now, what am I walking in and just saying, hey, I'm paying cash for the service, or how are they? It's just normal insurance.
Yep, you have a card, just like a regular PPO copay plan. You just get the card, you present it at the doctor, and they bill you accordingly.
Okay. And I've seen that there are some nice discounts for people that have used this before. So it's, it is almost like a cash service because they're not having to go through the whole process. Now, is there a certain insurance company that backs that?
There is not. You do have to look pretty hard in this day and age in the individual market to find HSAs. They're much easier to find and structure in the group market, but they're out there. They're definitely out there.
So tell me the group market again. What is that? That's for like the employees?
Yep. And we get the best discounts when we get to 5 employees or more.
Okay. So you're saying go hire 2 more people?
Yes. And in certain states, we can set up groups with as few as 2 people. The rates are not necessarily great, but sometimes they're a little bit better.
Now, is the employer considered one of the 5 people, or okay?
Yes.
Perfect. That helps because then it's one less person we need to hire to get that advantage.
There you go.
All right. So this is a health matching account.
Health matching account is a new concept. Basically what this is I think of it as a forced savings plan. So I have a debit card. It says HMA on it, health matching account. It sits in my wallet. Every month I have $150 deducted out of my bank account and put into that debit account. Every month that I don't use that account, Health Matching Services matches a percentage of my $150. So in 1 year, I will have contributed $1,600 and change. The account will be worth $1,900. In 35 months, which is when these accounts come to maturity, I will have contributed $4,900 and change, and the account will be worth $10,000. Great way to save if you know you have kids that are going to need braces in like 2 years.
Right.
Way to save for the braces. This debit card can be swiped at any medical office, a pharmacy. It can be used for acupuncture, chiropractor, even a massage in a medical office. It actually, and surprisingly, can be used for Botox and other cosmetic surgeries as well.
Yeah, it's like let's get very creative on where we can go ahead and use this. So if I contribute $1,600 to this, and then I end up using $300 of it, so I've got $1,300 at the end of the year. And then let's say that's the over the 35 months, that's the normal that I'm using about $300 a year of it. So it's just going to double what's left in the account at the end of the year, or on a basis.
No. So each month it's matching a certain percentage,
okay.
And it's very specific. It's got a very specific actuarial table. Okay. So at month 5, it's contributing more than month 4.
Okay.
And it continues to grow as time goes on. So at year 1, if I use $300 and I knock it down to $1,600, that actually is the contribution amount, or the amount that would be in the account, let's say at month 10. So then what they do is whatever I've used, it knocks it back to that contribution amount for the month I've knocked it to. So okay. At month 12, I used $300, I knocked myself to month 10. Now I'm getting matching for month 10, and it just basically restarts.
Okay. So if it's 1%, 2%, 3%, let's say month 10, and it's not going to be this kind of number, is 10%, you're only going to see a 10% return that month, not 12%, because you've brought it back to that one. Okay. Wish the returns were that great, but they're not. But that's just an uncommon core math example. Pets too. I love that. So I should get this for our dogs.
So I have a separate one for my dogs.
Okay. I love the health insurance for the dogs. Because it does get expensive, as we've seen some of our family have some trouble with the pets and going through.
So this slide is just about making a decision. And obviously, as we look at our budgets and our incomes and our desires, they don't always line up perfectly. So I would say, think about which benefits you'd really like to have. And especially if you don't have health insurance, that's probably the place to start. And set some priorities and think about adding, as your business grows, adding one or two of these benefits each year. Definitely find a broker who will just look at everything you're doing and show you where some of the holes are and give you affordable options that can make small changes, but maybe make a big change in your future.
Now, are you going through with your clients, every year and just looking at the policies that they've got and saying, hey, I think we should make these adjustments and kind of follow up with them on that?
Absolutely.
Change. Okay.
Yeah. So what I try to do, and I try to do this during open enrollment for everybody, but a lot of people have their policies mature at different times of the year. But what I try to do at least once a year is look at everything that my clients have. And, if there's a really high deductible, gosh, could we add an $11 accident plan that would pay for Emily's cut?
Right.
If there is no disability income or critical illness protection, gosh, maybe we need to just spend a couple extra dollars and make sure that you can survive for 3 months without working, if something bad happens.
So so the next part is find a broker you can trust and review your current coverage, put together short-term plans. What makes each broker different than the other?
So there are a lot of brokers out there who only have one product, and I would say they're not a broker. I would definitely find somebody who is licensed and contracted for multiple products and multiple carriers. So as an example, I'm licensed in 16 states, and I have, between all of those states, I probably have contracts with over 200 carriers.
Wow.
Some of those carriers are, state specific. Some of them are national. But if I am calling you to sell you health insurance and I can only sell you Ambetter, it may not be able to take care of your needs. Make sense?
Yep. Yeah. And that's, I guess, so you've got to find someone who's got the most options out there. It's not like just going to Allstate and saying, I want the Allstate home insurance. I want to go to the broker to see who can give me the best. We were with Allstate before as an example. Now we've got Brightway Insurance, and they call me every year to say, hey, St. John's is going to be increasing the rates crazy because of, Florida hurricane. So let's look at these others. So we do switch the insurance, save $1,000 a year or whatever it is. So there's always somebody looking out. So it is good to have a broker that's why I ask if you check in every year with the clients to see if they're going to go through and if there's any different policies they should get or make changes, because this one just went skyrocketed or whatever it is.
Definitely. I also look at people as a whole, and we look at, right now they don't have any health insurance. So that might be a big step for them to add health insurance. But I also know that in a year, we're going to talk about life insurance.
Yeah.
And in 2 years, we're going to talk about disability. And so we set goals for each person. And, it's a long-term relationship. We want our health and our finances protected. Right.
Oh, it can be a big blow. If God forbid, if anything ever happens to any one of us, we want to make sure that we are covered. All right. So next, I think you're worth it. No, is that? There we go.
Yep. This slide just, again, is you're worth it. We work really, really hard as independent contractors, every single day. And we do things for our clients. I know I write notes, I send them goodies, I send gifts, I, thank people for referrals. But if I'm not taking care of myself, then I'm not going to be able to do those things. So we're worth it. And
so what's the best way for someone to reach out to you?
Email or cell phone. Call, text, or email is what I tell all my clients. I also tell people that once they buy a policy from me, that's when my job begins. And it sets people, they get taken aback a little bit. They're like, what do you mean that's when your job begins? But I've gotten calls from clients, literally their fingers were bleeding from cutting a bagel. And they're like, well, you gave me a list of urgent cares I could go to in my policy, but I can't find it. Where can I go? And I'm like, oh, just a minute. And I'll find them in urgent care.
Well, and that's what's funny, because I've referred a lot of people over to you, and I've had a couple, had called me up and had said, we had this issue, and that they're reaching out to you to take care of that. I'm thinking, why don't they just call their insurance company? But you're actually still there after the sale's done, call it. I mean, in our industry with closings, it's the sale. Even on our side, on the real estate side, I mean, our job is not done once we close the house, because there are things that come up after. We still want to be in touch, make sure everything's going okay. And if you have issues, call us. If you have an issue with your home warranty company or any vendor along the line, please call us so we can help take care of it. And I love that you did that with our couple of clients that had reached out to us to say thanks for referring Kim, because we had that we cut our finger with a bagel or whatever it was, and she was able to provide some more information or help with the I don't remember what the complete issue was, but they weren't getting the coverage they were supposed to from the hospital or the doctor or whatever it was, and you were able to get that straightened out and make sure that coverage.
The claim was denied.
Yeah.
And I had to call the insurance company and file extra papers, and we eventually got the claim paid.
Yeah, and it's how they code it, so it's make sure that it's coded the correct way. So Kim, any final thoughts as we wrap up?
I would just say that the best thing to remember is you're worth it. You're worth benefits. You're worth taking care of yourself. And if you don't take care of yourself and you can't work, then, that's a scary place to be. So my job is to make sure you don't get there.
Okay. That's awesome. And I appreciate you coming on today. Guys, like, subscribe, Agents Who Win. YouTube, you find us there. You can find Kim with her information on the screen here. And then if you guys have any questions, please reach out to either one of us. We'll be happy to chat. Thanks, guys, again for showing up and tuning in. We are going to finish.
Thank you.